Bank of Canada did its interest rate announcement today, and they have held their overnight lending rate. Remember, that's just the rate that banks use to talk to each other. Nothing to do with any of your interest rates. What it does affect, though, is the prime lending rate, and this affects only variable rate mortgages and home equity lines of credits. So as of right now, everything is fine with those. What we want to look at, though, is the overall bigger picture. The feds in the States and our Canadian Bank of Canada are really concerned about something called stagflation. And what that means is when you have high inflation, slow economic growth, and a weak labor market, it's a perfect storm, okay? So good news, let's talk about some good news first. Good news is inflation numbers as of Monday have came down. However, like I said earlier in the week, those numbers are only to do with everything at the end of February. And remember that Iran war started on a Saturday, February 28th. So all of the March numbers are not into a play with this inflation, okay? Inflation came down because energy prices have, as of that report, had dropped 9.3%, which is amazing. And shelter and rent costs also came down as well. But at the end of February, February 28th, that Iran war started, and really what they're fighting about, I mean, part of it is oil, okay? The Strait of Hormuz, which Iran controls, is a 50-kilometer stretch of sea that connects the Persian Gulf to the rest, okay? And basically, all of the oil comes through that little strait. Not all of it, but quite a bit, okay? I think something like, I had a number, let me see here, I wrote it down. 17 million barrels of oil pass through there each day, or they were, okay? That controls 20 to 30% of the world's energy consumption. So energy is going to impact everything. Obviously, it impacts food prices. And not only it's not just oil goes through there, but medicine and fertilizer also go through that strait as well. So that's really going to change some things at our next report. However, right now, Bank of Canada is holding, okay? We're already seeing, as we know, higher energy costs, higher fuel costs, okay? What that means for interest rates is pressure on inflation. That can potentially push the bond yield up, right? So fixed mortgage rates could go up. Remember, though, the government does not control those bond yields. They only control what the Bank of Canada does, which affects variable rates and the prime lending rate, okay? We're seeing the housing market has some slower activity, and because of that, the bank has decided to hold, okay? So no increase right now, so that's good news. So the bank is trying to balance the slowing economy, and that normally would mean some rate cuts, but energy prices are rising, and that's going to raise inflation, so that means that they probably are not going to want to do any cuts. So right now, we're just in a wait and see, just like the rest of the world, we are waiting and seeing. Next inflation report is going to come out April 20th, and our next interest rate decision is April 29th, okay? So March is definitely going to see some different numbers. So we'll take a look. Right now, rates are holding. What does that mean for you? It means it's a good time to get your pre-approvals in. It's a good time to do a refinance. And right now, variable rates are stable, and there's actually some pretty good discounts on those. So it might not be a bad time to be looking at some of those, okay? Absolutely everything happening globally it affects interest rates, right? So if you have questions about what that means for you, reach out, book a call. Hey, I'm Lara Rockefeller, and I help everyday Canadians like you with their mortgage.